Are you prepared to learn more about Tesla's continuous achievements? You're in luck, though. As tech analyst and investor Dave Lee discusses the company's most recent earnings report in this video, along with his thoughts on why he thinks Tesla is only beginning to innovate in a way that will change the world. Tesla investors who, in spite of obstacles and competition from conventional automakers, will ultimately turn a sizable profit now that you've seen how impressive Tesla's Q4 statistics were. Both analysts and investors are ready to learn more about what makes Tesla a revolutionary company in the electric vehicle space. But first, I would like everyone who isn't already a World Street Games subscriber to click the subscribe button. Remember to click the like and notification bell buttons. Now, let's get going. According to Dave Lee, Tesla is only beginning to innovate its way into becoming the most advanced company in the world. As of March 2023, if you regularly listen to this channel, you are undoubtedly already aware of the investors' surprise upon learning that the value of their common shares had increased by a factor of 100 in less than 8 years. As with over 1.14 million subscribers, Dave Lee's YouTube channel is well liked, yet individual views on the validity of his research may differ. Independent tech analyst Dave Lee bases his ideas on insights on a wealth of industry knowledge and in-depth study. Dave Lee claims that the intended Gigafactory in Mexico serves a different function than first believed. He contends that the factory is intended to serve a new market in Mexico, Central America, and South America, which requires a more affordable vehicle than the current Model 3 and Y. He believes that the factory will not be used to produce Model 3 or Model I cars for the US or European markets. He believes that this action combines new geographic directions with a new pricing point for Tesla. According to Lee, the new cars and the factory schedules will probably align throughout the next 18 to 24 months. After looking over technical conversations, it doesn't appear plausible that the 25.0 cars will be limited to South America, Mexico, and Central America. Let's hear what Dave Lee has to say about this. One of his many unique perspectives. During its most recent Master Plan 3 investor presentation, Tesla displayed some outstanding results from the previous quarter. That there was a lot of hoopla from the corporation, some observers thought. But many who know Tesla well know that the presentation was grounded in truth. Despite this, some people were uneasy and didn't understand the importance of the information because they were probably only hoping to catch a peek of a cheap car. However, significant subjects, including the Cybertruck's impending release, the company's attempts to increase production capacity and lower prices, and the opening of a new Gigafactory Mexico were covered. Following the presentation, the share price dropped 5.9% at first, but it quickly rebounded. As of late, the company has traded below $195, which may present a buying opportunity for some investors. Things considered, it seems sense to ignore the hype and focus intently on the facts, bearing in mind that the shares were acquired at a substantial discount to their present value. Because according to Lee, company's revenue limitations directly affect Tesla's performance in the most recent quarter, which fell short of analysts' expectations. A stock's worth is determined by a company's capacity to generate profits. According to credit complaints, Tesla's Gigafactory High Factory was shut down on March 28 of last year due to heightened government measures to contain the pandemic and a surge in cases reported in China, according to CS. Despite the fact that electric issues forced the Shanghai Gigafactory, which produced over half of Tesla's vehicles last year, to close for many weeks, we remain hopeful about the company's future because it appears that Tesla's management has everything under control. The Gigafactory is idle right now, maybe able to inflict some harm per Tesla. 1.5 million units are anticipated to be supplied this year overall, with deliveries in the current quarter estimated to be roughly equal to those in the first 3 months of the year. According to Lee, Tesla needs to deliver more cars than investors anticipate and generate more profits each quarter in order to continue turning a profit. By 2030, Dave Lee believes Tesla will have improved. In addition to credit litigation, we also have insights from Morn Capital, a venture capital firm that Twilio CEO Jeff Lawson and former Bloomberg Beta CEO Roy Bahat co-founded. The company invests in businesses that employ technology to address significant issues with a focus on the future of work. In particular, they have made investments in businesses including Guild Education and Figma Notion. The founders' diverse expertise in technology, entrepreneurship, and investment enable them to recognize promising firms and foster their expansion. In its Q1 2022 investor letter, Capital stated that it believes Tesla would recover at least 10 times its initial investment by 2030. Given that its largest holding has been doing well lately, the firm decided to expand its stake in Tesla Holdings during the first quarter with the expectation that as an investor in Tesla, the company stock will outperform the CP 500 during that period. Regarding the brand's future, Gary Black has also made some intriguing projections. For instance, he believes that its market value ought to be $4 trillion. If every one of the 1.4 billion shares of Tesla were in circulation, the company's market capitalization would be very nearly $4 trillion. Black estimates that by 2030, electric vehicles will make up 60 of all automobiles on the road, meaning the company is currently valued at $1.09 trillion. By the end of the decade, if every share achieves a 100, Tesla would have produced roughly 10 million cars annually with 85 million light vehicles sold globally. But at the start of this year, Black believes that things can get worse before they get better. Since the stock hit a low of $108 in early January, the price of Tesla has fluctuated up and down numerous times, exhibiting significant volatility. The market, investor mood, corporate announcements, and international economic conditions are some of the factors that might cause the price of Tesla stock to fluctuate. When the stock price gets close to or crosses the $1,000 mark, it is thought to be a major psychological level for the stock and may spark buying or selling activity. The price volatility of the stock might also result from investors selling their shares or taking profits when the price hits this level. It's crucial to remember that stock prices are erratic and subject to regular fluctuations, so it's challenging to pinpoint a single cause for Tesla's price instability. However, one might speculate that Elon Musk's actions on Twitter may have played a significant role. The recent declines in the stock prices of Apple and Microsoft indicate that investors are losing interest in high-tech businesses. China has expressed concern over the increasing frequency of shutdowns that appear to be unrelated to one another. However, Cathie Wood doesn't appear to give a damn about any of these challenging businesses. According to a recent prediction by ARK Investment, a share of Tesla stock will be valued at $1,533 by 2026. The corporation believes that by 2025, each share will be valued at $1,000 before 2026. According to a previous post, the price in 2026 is expected to reach $1,667 in the bull scenario, $966 in the bear case, which is still over 6 times the current price. Dave Lee has repeatedly stated that he intends to own this stock for the long term and that he still believes we'll see significant growth by 2030. Kelly's Blue Book appears to support the belief that Leaves Kelly's Blue Book is a car valuation and research business that offers data on Tesla as well as new and used vehicles. From January to March 2022, Kelly Blue Book offered a range of evaluations and rankings on Tesla automobiles, including the Model S and Model 3, which scored highly for their functionality, style, and technology in the US. Electric vehicle market, Tesla held the top spot. In the first quarter of 2022, Tesla accounted for 75 all-electric vehicles sold in 2017. Tesla Model 3 and Model Y vehicles accounted for 68 of all electric vehicles sold in the United States. Elon Musk Company is prepared to challenge for the top spot in 2023 when it intends to launch new car lines such as the eagerly anticipated Cybertruck, Roadster, and semi-vehicles. Just like the factories in Shanghai and Berlin before it, the new Gigafactory in Mexico will give speculators plenty of material for speculation. What do you think the stock of Tesla will be valued in 2030? Please comment. Remember to thumbs up this video and subscribe to this channel as well. Thank you for viewing, and we hope to see you in the upcoming video.